Ethereum is the future of money, is that Ethereum has now risen for 3 months consecutively. And in fact, if Ethereum closes May above 2100, that would be the third consecutive month. As I'm highlighting here, there's never been a crypto winter where Ethereum has closed up 3 consecutive months in a row. In other words, the fact that we're up 3 months in a row means crypto winter is over.
Yes, the key word is if Ethereum closes the third month in May in green. Now let's go ahead and take a look at the charts and see if it's going to do that or not. It's going to close in 8 days. So let's go ahead and take a look. Right now we are on the monthly chart for Bitcoin, and we can see that we've had 2 green candles in a row, and this one was a third candle, which led people to believe that possibly this bear market could be over and going into a bull market sooner rather than later. But however, though, we have about 8 days and 7 hours left, so the candle has not closed yet, but it has switched over to red, which I believe it supports more that we could possibly still be in a bear market. And another thing that I have observed, I can see that each bear market has had 10 red candles, and so far we've had 5. And this would be the 6th one in May if it does close red in 8 days. If we look at the previous bear markets, we can count 10 red monthly candles marked the bottom for the bear market. I'm sure you've heard this before. Benjamin Cowan talks about this repeatedly on his channel, and so it's nothing new. Financial advisor, you got to do your own research.
Another way to think of this is to look at software stocks and Ethereum. Both have been highly correlated to each other, and as you can see, software stocks have risen along with Ethereum. In fact, at Fundstrat, software is now among our top sector picks as of May 1.
This is actually a really important point because most people still think Ethereum trades like some independent alternative financial system, but a lot of the time, Ethereum basically trades like leverage tech. And honestly, that changes how you should think about risk. Because if Ethereum is heavily correlated with software stock, then Ethereum might not actually be this fully independent hedge against assets. It might just be another liquidity-driven tech trade.
So that gets us to some facts that Ethereum is the best performing asset since the start of the Iran war. It's performing as a wartime store of value.
But here's where I disagree with this framing. One geopolitical event does not suddenly prove Ethereum is digital wartime money. That's too big of a leap because historically, when true fear enters the system, people usually run towards dollars, treasuries, cash, gold, not volatile crypto assets. I actually think Ethereum's strength right now may have less to do with war and more to do with ETF flows, stablecoin growth, tokenized narratives, AI narratives, also institutional positioning, also expectations for rate cuts. In other words, wartime may just be happening during the move, not necessary causation.
And here's the thing. It's been a great diversification tool since 2016. Take a look at this first column that's highlighted. Let's look at different allocations you could have done in terms of owning Ethereum on December 31, 2016, from 0% all the way to 33%. And these are the starting dollar values. So if you had $100,000, for instance, and you put 5% into Ethereum, that was $5,000 invested. This highlighted column is what it would be worth today. So your $5,000 investment would have grown to 1.5 million. In other words, if you compare that to having 0 allocated to Ethereum, okay, and you look at your total portfolio today, it's 230,000 if you had no exposure to Ethereum versus 1.7 million if you had 5% allocated to Ethereum. In other words, you had a 7 times increase in your total portfolio with just a 5% exposure to Ethereum. Now, another way to think of this is how much of each asset would you need to own to protect yourself against a 50% decline in the S&P 500? Okay, so this is the required hedge. You would need just 0.4% 10 years ago in Ethereum to protect yourself against basically a wipeout in the stock market. Gold, which is considered a store value, you'd have to have 37% of your portfolio. So you can see the point here. You'd want to own just a small piece of Ethereum as a source of diversification and as a hedge.
So here he talks about how Ethereum could be a good hedge against losses in the stock market, and you only need about zero point 0.4 in your portfolio to make up losses in the stock market versus gold that you need 37.1%. Now, my argument to this is that just because Ethereum has performed good in the past, or well in the past, doesn't mean it's going to perform this good in the future. And so this is assuming that Ethereum is going to have as much growth in the future as it has in the past, and also with the other assets as well compared. Now, that could be true. I don't know. I can't predict the future. And I could see how that could happen with tokenization, and if the world turns out to use Ethereum like how it could be used, and if it's used the way it's built to be used with tokenization, with stablecoins, also with AI agents using them, who knows what the future is going to be like in 10 years, let alone a couple of years. So it could be true. It could perform better than the past. I don't know, but it's assuming that it's going to perform better than in the past or just as good. And that is an assumption. And so that's my argument there. Let's go ahead and take a look at what else he has to say.
Now, Ethereum does track Bitcoin, so I think you should look at the price ratio. And the current price ratio is below not only the 8-year average, but the 2021 high of 0.087.
So here he's talking about how you can kind of track Ethereum's price by what Bitcoin is doing. And this is the ETH Bitcoin pair. And you can see it did bottom out in 2025, and then Ethereum had a big bounce. And who knows if it's going to hold right here or go back down to this level or even go down further. So it's not guaranteed it's going to bounce from here or not. It did double bottom from back in 2019. And a lot of cryptocurrencies are oscillators to Bitcoin, where it will go up and then back down, then up, back, and then back down. And that's at best what a lot of altcoins will do compared to Bitcoin. Now, Ethereum is different, in my opinion, to most altcoins because it is being used for a lot of different things. But just because it's being used doesn't mean it's going to increase the price of Ethereum, and it hasn't really yet. And it has been getting used by BlackRock and other institutions more than in the past. And so it makes sense that the price would be a lot higher than it is right now. And if the price does catch up to the fundamentals, then you can argue that Ethereum is at a discount right now. However, though, it is yet to be seen. And there's a lot of assumptions. And this is not financial advice. Do your own research.
And you've seen this chart from us before. If Bitcoin gets to 250,000, which we think is fair value in the next 12 months, and Ethereum gets to the 8-year average of the price ratio, that's 12,000 Ethereum. That's a lot of upside from here. If it gets to the 2021 high, that's 22,000 Ethereum. Keep in mind, those are two numbers to watch. And if ETH becomes the payment rails of the future, which we believe is the case, that would imply $62,000 Ethereum. So clearly a lot of upside from here.
Okay, so this is where it gets very interesting because he talks about 8-year average compared to Bitcoin, and then also with the 2021 highs with compared to Bitcoin as well, and what the price targets would be for Ethereum. And then he goes on to talks about with payment rails, where the financial institutions and the system would be essentially using Ethereum for what it's built for tokenization, for the tokenized dollars, the whole 9 yards, tokenized gold, putting everything on Ethereum. And so far, there's a lot being built on Ethereum. He's going to go more into that later on this video to show why he thinks that to be the case. And so it very well could do that, but that's assuming that that's going to happen. But the more assumptions there are, the earlier you are getting in on something before it happens. Once it does happen, the price of Ethereum is going to be way higher, in my opinion. That's going to be that's my belief. But right now it's undervalued because it hasn't done it yet. That's also my belief as well. I don't know if it's undervalued at all. It could be undervalued if it does actually get used in the future for what it's built for.
And Ethereum is exiting a long consolidation, something I've talked about before. You can see this current consolidation is 5 years. But those other consolidations resulted in pretty explosive upside moves. 227 times after the 2016 consolidation, and after the 2020 consolidation of 54x for Ethereum. So I think this next upside is going to be led by tokenization and agentic AI. So let's talk about the future of money. Now, Elon Musk said something pretty profound recently. He says that this future system won't use dollars as currency, just mass and energy. What he's really referring to is that compute and energy are the two scarce assets.
Yeah, this is interesting what Elon Musk has to say about energy. And Tom Lee's take on it is that he believes Elon Musk is talking about compute and energy, which includes Ethereum, because Ethereum is staking, not proof of work. And proof of work requires more energy. So I think Elon Musk was actually referring more towards Bitcoin and also Dogecoin as well, because he likes Dogecoin, and both of those are proof of work, which use a lot more energy. And also Elon Musk is all about those batteries and renewable energy as well. So it's kind of his expertise. He has a lot of vision around energy and about how to utilize energy the most efficient. And it could tie into different proof of works, especially because they are energy intensive as well. But I can see Tom Lee's point of view. He's more of a stock market kind of person and software. And so he's focused on Ethereum. So he kind of maybe translates it and has a different point of view perspective, including with Ethereum. But here he's quoting Larry Fink and how he thinks that compute will become an asset class, and it's actually a scarce thing, just like energy is scarce. Right now, the Strait of Hormuz is being blocked, and it's blocking all the oil, and so the world is kind of getting this idea thrown in its face about how scarce energy can be. And I would say with data centers as well, as far as the AI boom is going, and there's definitely a shortage of data and also energy for that, and compute power as well. And so I can see how in the future those could be very, very scarce, and there's a high demand for it as long, along with energy as well. And I think we've always had that energy demand from the past. And I think the extra compute scarcity that's going on with AI is just now starting, but I can see in the future how it's going to be even more of a demand and very scarce resources. So this is very interesting stuff, very thought-provoking. I don't think people realize how big tokenization can actually be. Think of all the real estate out there, and they're planning to tokenize that. Also, they're planning to tokenize fixed income equities, liquid derivatives. It's kind of blurry, so it's hard to read, but basically they're going to tokenize everything. And this is going to change the world. I think it's good for whatever layer one that they build all this on. And I do think possibly there's going to be multiple layer ones like Solana, XRP, Ethereum. And I think possibly, maybe they might be, if one gets busy, people are going to switch over to another one or a different one after that. So I think they're all going to be used, and there's going to be so much demand for tokenization that you can have more than one chain, and it's going to be maybe possibly too much for one chain to handle all this tokenization. And I think this is going to create one of the biggest booms in all the different equity markets, like all the different markets out there, real estate, every single one out there, debt markets. Because when you're able to tokenize all these different markets, then you're able to have more participants and more money flowing into these different markets, which is going to make all these different grow. So who knows what the best investment is going to be in the future with all this tokenization. I look at like Ethereum as maybe like the highway basically, and all these different markets are the cars. And who knows which car is going to be most needed. But the road is definitely needed there, which is the layer one. It can be Ethereum, Solana, XRP, or all of them. So this is Ethereum and also total value locked. And this is a good time to really think about this because you see it's correlated with the price of Ethereum and the total value locked. And so that's a good way to value Ethereum. And so the more markets that are tokenized and put on Ethereum, if it's correlated with the price, it should increase the price of Ethereum as well. And so that's very interesting. And I do see in the future that there's going to be more markets tokenized and put on Ethereum. And so I believe that if this chart holds up, it does, just because it happened in the past doesn't mean it's going to happen in the future, but that could mean that the price of Ethereum will rise with the total value locked up. Tell me what you think in the comments below. Leave me a comment and let me know what you think. This is just my own opinion. I'm not a financial advisor. I don't really know. It's just I find this very interesting to think about, and I'm interested in what you think about this as well. So please leave a comment.